evening, friends. Today we'll bring and discuss about the Ather Energy Company IPO, which is scheduled to open tomorrow, which is the 28th of April 2025, and the bidding or the IPO is likely to close on the April 30th. So, following the allotment process, the shares will be listed on both the stock exchanges. Ather Energy was founded in 2013, pioneer in India's electric mobility space, focusing on design, manufacturing, and sale of the smart electric two-wheelers. The company's flagship scooters, the Ather 450 series, featured advanced technology integrations, including Internet of Things and OTA over-the-air updates. Ather also operates a growing EV charging network under the brand Ather Grid in multiple Indian cities. With a commitment to the innovation, the company aims to revolutionize urban transportation and strengthen its presence across India's electric vehicle ecosystem. GMP, the grey market premium price for the Ather company, was reported at 3 rupees as of today. This indicates a slight premium over the issue price, reflecting cautious investor sentiment. The GMP trends often offer an early indication of the stock's potential listing performance, and the market observers are closely tracking any changes in the listing date approaches. The company's promoters include Tarun Sanjay Mehta and Swapnil Babanlal Jain, the original co-founders, along with the Hero MotoCorp Limited. This promoter trio brings a blend of engineering expertise, entrepreneurial vision, and industry backing that has driven Ather's strategic evolution in the competitive EV landscape. Selling shares, the offer for sale features contributions from both promoter and non-promoter entities. Promoters Tarun Mehta and Swapnil Jain, each offering 9.8 lakh equity shares. The other major selling shareholders include Cladium, Cladium Investment Private Limited 60 lakh shares, National Investment Infrastructure Fund 26 lakh shares, Internet Fund 3 4 lakh shares, and IITM Incubation Cell IITMS Rural Technology and Business Incubator and individual shareholder Amit Bhatia. The diversified group of sellers highlights early stakeholders monetizing part of their investment. The IPO is being managed by a group of prominent investment banks: Access Capital Limited, HSBC Securities, and Capital Markets India Private Limited, JM Financial Limited, and Nomura Financial Advisory and Securities India Private Limited are acting as the book running lead managers. MUFG in time India Private Limited will serve as the registrar to the offer. Objectives of the IPO: the company's expansion initiatives and strategic projects. Ather plans to utilize the proceeds to establish new manufacturing facilities, strengthen its research and development capabilities, invest in innovative product development. Additionally, a portion of the funds will be used to repay borrowings and support day-to-day working capital requirements. The remaining funds will be allotted towards general corporate purposes, ensuring operational flexibility and future readiness. The revenue stood at 1,753 crores in FY24, showing a marginal fall from 1,780 crores in FY23. Despite significant investments, the company's net losses expanded to 1,059 crores in FY24 from 865 crores in FY23. The negative EBITDA margin reflects ongoing operational investments and growth-focused cost structure. Ather's asset base rose to 2,172 crores, driven by expansion in infrastructure and technology. The company's financials underscore its aggressive investment-led growth approach in a highly competitive market. So Ather competes with established and emerging electric two-wheeler players such as Ola, TVS, Bajaj Auto, and Hero Electric. Unlike traditional manufacturers, Ather emphasizes a premium product experience and end-to-end technology integration. It stands out with its direct-to-consumer model and proprietary charging network. However, competitors benefit from extensive distribution networks and cost advantages. Ather's differentiation lies in its focus on connectivity, innovation, customer engagement, which are critical in the EV landscape. Strong brand presence in India's premium electrical two-wheeler market, proprietary EV platform with full stack product integration. Ather Grid offers a nationwide charging infrastructure advantage, committed to innovation through an in-house R&D. Strategic support from Hero MotoCorp ensures financial and operational stability. Weakness: persistent financial losses raise concerns on profitability, faces stiff competition from mass market and low-cost TV brands, high marketing and customer acquisition costs impacts margins, limited international footprint reduces global growth leverage, vulnerable to supply chain disruptions and input price volatility, presents significant opportunities for investors seeking exposure to the India's electric revolution. The company's focus on technology introduction and brand-led growth positions itself as a long-term contender in the EV sector, while finances reflects ongoing investment and losses. Ather's strategy, direction, and innovation-centric approach offers promising prospects, though the views and investment tips expressed by the investment experts, broking houses, rating agencies through the internet are their own, and I do not have any personal input in them. Investing in equities possess the risk of financial loss. Investors must therefore exercise due caution while investing or trading in stocks. The author of this article is not liable for any losses caused as a result of the decision based on this article. Please consult your investment advisor before investing in the stock. So some details that we can go through. Let's go through some figures, facts and figures. So the grey market price is basically what people are ready to pay extra uh, for this share price once the stock is listed. So suppose if the price of the stock is 100 rupees, then the grey market price with a premium of 40 rupees to the share price issue of 100 rupees makes a total of 140. This is the price of 140 that customers are willing to pay to buy this stock, and it will reflect once the stock is listed on the exchanges. So this price can fluctuate and change almost on a daily basis. So you can see the GMP was high at 40 rupees on 22nd of April, and now it is as down as low as 3 rupees on the 26th of April. So 2980 crore IPO, price band is 304 to 321 with a market lot of shares. Top player, we've been through most of this information. Then Ather sold 1,09,577 units. This is the GMP trend in the last 4 or 5 days, from 40 down to 5 rupees. So fresh issue of 2,626 crores, and the remaining is offered to sell. Price band of 1 rupee per share for a premium of 320 rupees. Price band is 304 to 321 rupees. Up approximately 1 crore 10 lakh 51,000 equity shares to be offered. book build issue, retail quota not more than 10%, QIB quota 75%, NIA quota not more than 15%. So open date 28th, close 30th, allotment basis first, refund second, demat credit second, listing on 5th of May. So this is the disclaimer for GMP, valid as of the day when it is published or available. Uh, Here again, it suggests that you should consult a stockbroker before investing. Do not subscribe for the IPO by just seeing the premium price. It may change anytime before the listing. Subscribe only considering the fundamentals of the company. So the company is a pure play EV company selling E2W batteries and other related products. Company is expanding capacity with a new unit in Maharashtra. Company posted losses for the reported periods and has carried forward huge chunk based on financial performance. The issue is at a negative PE. The borrowings is 1,121 crores as of December 31st, which is alarming. The company enjoys strong parentage and is the main attraction. It's a pure long-term story, hence well-informed cash surplus investors may park their funds. Yeah, we've read through most of this IPO size. Also, we've read through about the company. We've been through some information already. It develop all components of the Ather stack software that powers its products in-house. The company has sold in the last 2 years. Then emphasize on capital efficiency, value change, and prioritize control over operations. So it is doing a backward integration to ensure that all the basically from start to end the entire process is managed in-house. So company has a factory in Hosur, Tamil Nadu. It has a total annual installed capacity of 420 units for E2Ws and 379,800 units for battery packs as of December 31st, 2004. It is in the process of building the first phase factory 3.0 in Shambhajinagar, Maharashtra, India to expand its total installed production capacity to 1.42 million E2Ws upon completion of phase 2. It operates an asset-light distribution model comprising experience centers and service centers operated by third-party retail partners India and through authorized distributors in Nepal and Sri Lanka. As of 31st December, it had 265 experience centers, 233 service centers in India, 5 experience centers and 4 service centers in Nepal, 10 experience centers and 1 service center in Sri Lanka. So that is it, guys. Thank you for watching this video. Important information about the IPO has been shared. The company is at the moment making huge losses and it is increasing capacity by the way of increasing its production facility in Maharashtra. So though the input and the output will increase, uh, there is going to be uh, demand based requirement here. So if the demand for the two-wheeler electric vehicles doesn't improve over a period of time, you may see that the company may still continue to post losses until the overall demand for electric vehicles improves and the company is able to capture a major portion of the size of the business there. So thank you for watching. Please consult an investment stockbroker before investing. Thank you. Have a great week ahead. Take care.